What if I told you a few little secrets about how consumer banking actually works? So I'm coming to you today with, of course, as I've mentioned in a couple of my more recent episodes, I was recently terminated by Wells Fargo, probably about 3 weeks ago now, and I have a whole subject archive there of personal performance improvement plans as it relates to that. But that's not what this is about today. What this is about today is how to shop for a personal savings or checking package or accounts, as it were. How companies actually make money, how the banks actually make money off of these accounts, and most importantly, what some of these banks actually think of you as a customer. So let's sit down with the how do banks make money off of these savings and checking accounts point. There's a traditional answer for this question, and that traditional answer is that banks would pay a certain amount of interest on your savings accounts and checking accounts, and then in turn use the money that you have in those accounts to make loans and earn interest that way for themselves. Now, that's still true, but it's not the real answer anymore. That is still true to this day. Banks still make loans, and things like that. And so, and they certainly make their money that way. But that's not the real answer. The bigger banks anymore don't need your savings money in order to loan money. They're capitalized through Wall Street, and they're capitalized through most of them are public corporations, Wells Fargo of course being one of them. And they have ways of gaining proceeds to loan that way. So the savings component is not nearly as important as it used to be. Savings itself can be a profit center for the banks, not a means to fund future profits. So that's the traditional answer. But let me give you the real answer here. How do they make money off of your deposits? You see, with your checking account, you get a little debit card. And that debit card enables you, of course, to access your money at merchants around the world. Now, the little thing that they'll never tell you is that banks and card issuers will charge merchants what is called interchange. And this is a big revenue source for any of the banks. They charge what's called interchange, 2% or sometimes more of the transaction amount that you're spending. And so let's say I have my US Bank debit card, which is my new personal bank. More on how I came to that decision shortly. But let's say you have my US Bank debit card, and I go to Quick Trip, convenience store chain in Minnesota. I go to Quick Trip, fill up on gas, go get, a couple of low carb monsters. I get $10 worth of gas. Low carb monsters run me, $3.50 a piece. Let's say $17 plus tax. Let's make it $17.50 just for kicks and giggles. Okay. I spent $17.50 out of my checking account through my US Bank debit card. And Quick Trip's terminal asks me if I want to put in a PIN or if I don't, or if I want to skip the PIN. This is another important distinction to remember. If you use a PIN, you're going through the debit card transactional network. Quick Trip might pay 2% of my $17.50 off of that, so it's like $3.50, 35 cents ish that is going to US Bank for the convenience of using my debit card. This is coming out of the transaction amount. This is not any separate additional payment that Quick Trip is going to charge me. The merchant is getting charged for this. Now let's say I decide to skip the PIN, or let's say I use a credit card. I've got one of those too. Okay? So let's say I use an actual credit card. The interchange on those is somewhere close to 5% if you don't use the PIN and it goes through the credit card transactional network. Which is why a lot of companies will, or a lot of banks will offer you some sort of special promotion to skip the PIN. So, as I've mentioned before, I drive part-time for Uber deliveries and DoorDash deliveries. If you skip the PIN on Uber, they will give you a higher percentage of your cash back on your gas purchase. But that said, it's because they're charging the merchant up to or close to 5% of your gas purchase in interchange. So they're coming out way ahead, and you're not. So the real method on how banks make money off your deposits is from the debit cards. It's not from holding the money or any interest spreads. Now, there's a very microscopic method too, which is called the overnight rate. And banks that hold your deposits overnight, they get paid a very small amount of interest by the Federal Reserve, because the Federal Reserve, of course, controls all monetary transactions in this country. If they're holding your deposits in one of their accounts, which they likely are, they will get paid a very, 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 very tiny amount of what's called overnight interest. Usually 0.01% or something similar, maybe even a little less. So they get a little tiny bit of revenue out of that. But now, carrying forth to how to shop for a bank account. When I got let go by Wells Fargo, I had no reason to continue to maintain an account there. I no longer had the team member account. I would have been given a more basic consumer banking account. So I had no reason to remain with Wells Fargo. And so the shopping began. And credit unions have typically very good deals, and this is no different. I know I found a couple of them that were willing to pay on my savings 3.5%. Not bad. But given that I travel a reasonable amount and that I am driving around quite a bit, I like easy access to my funds whenever possible, and U.S. Bank has more branches in Minnesota than anybody. So I went to U.S. Bank and looked up their accounts, and they have a checking account, and promotional bonuses are also a way on how they get you in. And so I signed up for one of those. I've noticed that Wells Fargo's promotional bonuses for new accounts is going down. The amount that I got from U.S. Bank was honestly triple what I would have gotten from what a new customer gets from Wells Fargo. Chase is same, their promotional bonus, you can get $350 or even $400 on a new checking account with them. But the number of physical brick and mortar locations for Chase, even though they're growing in Minnesota, the number of those locations is still a little thin. So I'm thinking of that. Then looking further, U.S. Bank, if you had their new promotion, their new, what they call Bank Smartly checking accounts, they will also pay a full percent on one of those savings accounts. Now, 1% is nothing to write home about. I'm certainly not going to shout it from the rooftops per se, but that's better than the insulting rates that Wells gives. On their so-called platinum savings accounts with a higher balance requirement, you get 1/100th or sometimes 5/100ths of a percent in interest. At U.S. Bank, I'm going to get a full percent on whatever my balance is. I'm certainly not going to have $5,000 at this moment. But 1% is, It's not great, but it's not insulting either. It's okay. So I took the overall package from them. Now, why do they offer these bonuses? Well, I just explained why. Because they make a lot of profit off of interchange with the debit cards. That's their real money winner. That's their real revenue source. Now, why are the Wells promotional bonuses going down? Well, as somebody who's been on the inside and who has worked customer complaints for them, the answer is very simple. They do not think very highly of consumer accounts. I believe they believe that there are other more lucrative opportunities out there now that the asset cap has been lifted from them by said Federal Reserve. Their future is not in consumer banking, and I think the attitude that they've taken towards their customer complaints reflects that. Now, why do they even have a consumer complaints department, or why do any of these banks have one of those? Well, in the case of Wells, having gone through the whole fake account scandal, the regulators are kind of on their rears have been for years. But at the same time, it's cheaper for them to maintain that department than it is for them to actually deliver resolutions that customers like. And again, Wells Fargo only looks to customers these days as a money source. There's no people, there's no reflection of them as people. There's no desire to have them succeed financially back there. I know this as somebody who recently was let go and terminated by a department that worked in that area. So forget about me. I'm more concerned about you as a customer. So when you do your shopping for another bank, for another bank account, be careful. Look at the details. Speaking of details, Wells likes to change their accounts, and they like to force customers into new, less lucrative accounts. And the explanation that they give is that, well, it's in your deposit account agreement that way you can make these changes anytime. That is, if you ask me, unethical, but at the same time, it's also very legal. You can't sue Wells Fargo for changing the terms on your bank account because the deposit account agreement that you sign at the time of account opening says so. Most banks, I think, have this type of a clause in their deposit account agreements, but I don't think anybody has used it to change account terms to the level that Wells has. Do I think you could eventually wind up in a new legal situation? Possibly, but it's not going to be very easy to prove. So there you have it, guys, some of the more dirty secrets of consumer banking. Of course, all of these banks are under pressure from Wall Street and from the investors from which they receive their monies. But Wells is the most aggressive at trying to satisfy these analysts, investors, and Wall Street capital sources. Why they do that, I don't entirely know. I wasn't that high up the decision-making chain. Those decisions were made well above my pay grade. So with that said, those are your secrets today in consumer banking, how it really works and how they really make their money. I'll be back tomorrow. This is a little bit of a diversion from the usual political world history situation, but I thought it was important to share. And I'll let you go at that note, and I'll say later, as always, peace out, homies.